Hello everyone, welcome to the only channel on YouTube that will help finance your weekends out. In today's video, we're going to start off by taking a look at the put to call ratio, which usually marks a market bottom. We're going to also take a look at the rest of the market as a whole. We're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, and continue to put it all together as we have been already. So without further ado, let's get started with the video. All right, so real nice and quick, I posted this on Twitter earlier today. This is the put to call ratio. And the orange line is the SPX. So we could see, like historically, when the put to call ratio breaks above 1, especially when it breaks above 1.5, it usually signals the close, basically the bottom. A bottom usually forms shortly thereafter. So you could see that it happened multiple times in history, and it has a very, very high success rate. And every time this happens, there is a 94% chance that within 3 months, the market ends up being positive. So there's a pretty good chance that this ends up being a bottom somewhere close, right? And that's another reason why it is very, 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 very difficult to be bearish on the market right now. And that's goes on to show that this put to call ratio flipped this number yesterday. So that's basically the whole point that I've been trying to say. It's tough to try to go short at these levels. And this is another factor that we can look at. You have to be buying the dips here. It's really, really difficult to be going short at these levels. So now basically all we really need to take a look at is the VIX, the dollar, and the yields. And then I could also give a better explanation of why we had such an inside trading day on the market as a whole. All right, so let's get started. So basically the VIX is very, very important to look at because it has an inverse relationship to the market. If the VIX is bearish and it's showing weakness, then that is bullish for the overall market, guys. So right now, clearly on the VIX, we're holding this level of support, but this is not a bullish setup. And if this was an equity, right? If this was like a normal stock, you would want the VIX to bounce up a little bit to get a better shorting opportunity and then for a continued move down. So the VIX basically did exactly what was necessary, which is the most bearish thing for the VIX was to bounce up a bit and then flip red anyway. So the VIX is currently looking bearish. Yes, we are at a level of support, but we got another opportunity to short. And we had a bounce upward and that didn't sustain itself. So the VIX basically showing right now what happened on the VIX. When you have a very small change in price on the VIX, the yields, things like that, it doesn't always translate to a huge move in the market, which is why we saw today bulls and bears basically fighting. We had a really, really strong move to the downside, but then we had an abrupt, crazy, just enormous move to the upside. So then things like this, setups like this, when the VIX does something like this, that's what ends up happening in the market. So yeah, there's that for the VIX. Next, let's take a look at the dollar. All right, so the dollar is showing a lot more bearishness. So we can clearly see that that was a top, right? And the dollar, once again, is important to watch because it gives an inverse relationship to the market as well. So when the dollar is rising, generally that is bearish for the market. And we can clearly see, the dollar is now close to a level of support as well, but it had some follow through red days. We need to see if we can just have another big move to the downside. But clearly showing some weakness on the dollar. We could have a bit of a bounce back to a level of resistance, but regardless, this is bearish. This is bearish on the dollar. And if things are bearish on the dollar, then they should be bullish for the overall market. All right. And now we'll take a look at the yields. All right. So the yields are important because, again, similar to the VIX and the dollar, the yields also have an inverse relationship to the market. So if the yields are doing well, then that is generally bearish for the market. So what we can see is similar to the dollar and the VIX. The yields had a bit of a red day. This is not a bullish setup. I was talking about how yesterday It was not a bullish setup. So today, this is how we closed. 5-year yield looks garbage, right? 2-year yield also looks garbage, but now the issue is that the 2 and the 5-year yield are both near levels of support, regardless of how garbage they look, right? Pragmatically, you can see that it dropped right to this level, this interesting yield. And the 10-year yield also, you could see that it closed red, does not look good, disgusting. This usually leads to like a vomit to the downside on the 10-year yield. This is very, very bad. And now we could quickly just take a look at the 20-year yield. Same concept. This is disgusting setup on the 20-year yield. Depending on how we close. So depending on how we close, like this is the close of today, this candle. We just opened here, but you know, once again, we got this level of resistance that we tapped, and it's not as bad as the VIX, where the VIX, we bounced to a level of resistance and then ended up red. We actually still ended up green here, but regardless, this wick to the upside is just very, very disgusting, and it's not a bullish setup at all. So today should be interesting. And then the 30-year yield, very similar to the 20, obviously. So yeah, the yields as a whole look bearish. It looks like the yield should be falling. The dollar also looks like it should be falling, and the VIX also should be falling. But now the issue is that there are the smaller yields that can have a bit of a bounce because they're at levels of support, and the dollar can also have a bit of a bounce because it's also at a level of support. But overall, this momentum based off these moves and based off the highs are bearish for these different things. So if they're bearish, all of these are basically showing bullishness for the stock market. Okay. So now let's have some fun and take a look at the large tech stocks. Let's just first start this off by looking at the NASDAQ. Okay. So the NASDAQ, this is very, very bullish. Sorry. Let me rephrase that. This is bullish that we closed above the trend line again. So this is a very, very important trend line that we got another close above on the NASDAQ. And we also held the 23.6% fib. We wicked down lower, made a new low, and bounced up afterwards. So we had an inside day, primarily, in my opinion, because of the VIX and the small movements out of the yields. So buyers, I'm expecting this to maybe chop around a bit, but the longer the just buying pressure can start to really like pressurize, then it could lead to a very, very strong bounce. So there's a lot of just imagine like a lot of pent up just buying pressure that's currently being formed here while trying to stop a bearish momentum. So when this happens, it takes some time, but this can have a very, very big short squeeze based off of just the sheer various different bullish setups. And I think that I would be very, very surprised to see so easily, right? By no means am I saying that this is like an automatic long opportunity. You have to be bullish here. You know, if you're not bullish, I'm bullish because if you were to, you know, take a trade right now, you have to go long. You cannot be going short down here. And that is what it is, honestly. For the SPY, we're going to take a look at the SPY afterward as well. But the SPY at 420, 421, 422. How in your right mind do you think that it's time to start going short at those levels of support after a huge move to the downside from 450? We dropped 30 points and you want to start piling in on shorts? Sure, that could work. By all means, it could work. The momentum is clearly bearish. We could easily fall down to 410, 415 very easily. That's not what I'm saying. We could fall. But you're risking, like, the risk reward for that trade setup is not there at all. And it just isn't a good trade to make. So if it works for you, congratulations. But for all of these different reasons that I'm explaining, it's just not really a great trade. Someone actually said in the comments yesterday that, you know, the smartest thing to do is just not take a trade, which is 100% true. So, but, you know, got to take high quality trade setups whenever they come. So this is one of those high quality trade setups that have been happening. So it is what it is. We live by the sword, die by the sword. It is what it is. So the NASDAQ closed above. Cool. Let's take a look at the large tech stocks as a whole. All right. So Apple, this is not what bears want to see, in my opinion. Apple showing this strength, like I was saying, this is not what bears want to see. We don't want to see the large tech stocks starting to do well and continuing to do well while the rest of the market is like teetering on the brink of destruction. All right. So Apple, clearly you could see some strength coming out of Apple here. Amazon, you know, whatever with Amazon. Meta, back, and it's still like, it's really trying to break above this 308, 306 level on Meta, but it's still showing some bullishness, showing some strength here. Okay. Google, clearly similar, right? We pulled back a bit and we bounced back almost to yesterday's close. So this is still showing some bullishness on Google. AMD, same concept on AMD. A very important chip related stock. Obviously, AMD, a leader in the market. Nvidia, this is not what bears want to see. Like, these are bullish moves with the winners of the market showing this sort of strength. Especially with tech stocks showing this sort of strength. It is helping the market stay up. So let's take a look at Microsoft. Microsoft, same concept. So basically what I'm trying to show is, oh, and Tesla made another high, but then, you know, closed a bit red. But regardless, I'm surprised Tesla didn't even fall lower. So usually when Tesla gets a big move like this, it tends to fall at least to the 50% of this candle, a little lower, but this is showing some strength regardless on Tesla. So yeah, interesting stuff, right? Large tech stocks are showing strength. Yields, VIX, dollar starting to show some weakness. So now it's just a matter of how much higher things can go, and if these levels of support can break, or are we just going to fall, you know, below this 420, 421 area on the SPY. And that is really what's going on right now. We didn't break above the trend line on the SPY. But once again, is this really the time to start going short? Probably not. But the smarter, you know, thing to do, if you were to go long or short, you have to go long. You have to go long here. If we make another leg, you have to keep going long, which is the worst part about this market. So, yeah, you know, it's the bullish reasons are piling up. So that is my thought process. That's currently what's going on in the market. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.